higher for longer. Why America's yield curve keeps pushing up the long bond. Flint West reporting. And yes, I brought the receipts. Let us lay out the evidence clean and clinical. The receipts that prove the long end is not drifting higher by accident, but by structure. The 10-year, 20-year, and 30-year are all sitting in multi-quarter consolidation ranges above their long-term moving averages. Momentum is neutral, not overbought, not weak, which means there is plenty of room for upside. The 200-week simple moving average support is intact across all maturities. The risk skew favors higher yields unless recession hits hard. In other words, the charts are not confused. They are coiled. Technical framework. For the record, weekly time frame. 200-week simple moving average. Relative strength index 14. Support, resistance, trend channels, compression structures. No mysticism, just structure. The 10-year holding above the 200-week simple moving average for 5 straight quarters, coiling in a 3.8% to 4.6% range. Relative strength index around 47, balanced, not tired. Higher lows since 2024. Bias, mildly bullish toward 4.6 to 4.8%. The 20-year strong support at 4.0 to 4.2%. 200-week simple moving average turned upward, new regime. Multi-quarter sideways energy buildup, relative strength index mid-range, no trend damage. Bias bullish tilt, a 4.9% breakout, opens path to 5.2 to 5.3%. The 30-year above trendline support, and 200-week simple moving average. Compression continues from 2024 through 2025, no bearish divergence. Bias upward drift toward 4.9 to 5.1%. Cross-maturity synthesis. All 3 maturities are singing the same song. Bullish long-term trend. Consolidation. No overbought risk. This is synchronized behavior, not random noise. In every historical regime like this, the 10-year leads, the 20-year follows, the 30-year confirms, and that is exactly what is happening. You ever notice how everybody keeps asking when rates are going to fall, but nobody's asking why they should? That's the funny thing about America right now. Folks are still talking like it is 2014, like Janet Yellen is about to walk on stage with a magic wand and sprinkle low yields across the land. But the bond market, brother, the bond market is singing a different hymn. And the long end, the 10, the 20, the 30, that is the choir. See, the yield curve is not a bunch of squiggly lines. It is a confession booth. It tells the truth everybody else tries to dodge. And the truth is this. America is higher for longer because America built it that way. Let me break it down, Flint West style. You've got a country running 6% of gross domestic product deficits in peacetime. That is not a budget, that is a lifestyle. You have got the Treasury dropping $1.2 to $1.8 trillion of fresh paper on the street every year, and looking around like, yeah, somebody gonna buy this? Back in the day, China would have taken half. Japan would have taken the rest. Europe would have nodded politely and asked for another round. But today, ain't nobody showing up at the auction wearing the savior badge. Foreign buyers stepped back. Domestic buyers are tapped out. And the Federal Reserve cannot clean this up without lighting inflation on fire. So the market does what the market always does. It marks the dream to reality. It takes the future America keeps postponing and prices it today. That is why the long bond keeps drifting up, even when the headlines swear it should not. That is why every dip in yields gets bought by the government, not the investor. And that is why your charts, those pretty slopes from 2020 to 2026, are starting to look like stairs to a higher floor. Higher, for longer. Not because Jerome Powell says so, because the structure demands it, because the system needs it. Because America, for all its brilliance, refuses to pay yesterday's bill with yesterday's dollars. So the yield curve does it for them. You can fight the Fed if you want. You can fight the headlines. But you cannot fight the long end. The long bond is the referee of the entire empire. And lately, the referee's whistle is saying the same thing your charts are. Playtime is over. Funding costs are real now. And the market, the real market, is listening. Higher for longer. Because America made it unavoidable. Because the long end does not lie. And because the future, my friend, just got expensive. Flint West, signing off.